Hey everyone, welcome back to Corporate Decoder, where we decode the confusing world of corporate finance and try to make some sense of it all. Today we're diving into Matson's latest earnings report, and it looks like there's a bit of a story unfolding here, especially with their shipping and logistics business. Before we jump in, if you like getting the straight scoop on what these big companies are up to financially, make sure you hit that subscribe button and ring the bell. Also, we've got a great community over on Discord where we break down these filings even further. The link is in the description below, so come join the conversation. Matson Inc. has released its quarterly report, and it gives us a peek at how they're doing mid-year through 2025. They're involved in ocean transportation and logistics, basically moving goods around the world, especially connecting places like Hawaii, Alaska, and Asia with the US mainland. Let's start with the top line, the money coming in. For the first 6 months of 2025, Matson brought in a total operating revenue of $1,612.5 million. It's a nice jump from $55 million in the same period last year. So business is picking up overall. Now, who's driving this growth? Their ocean transportation segment, which is the bigger part of their business, saw almost all of that revenue increase. Revenue here went up to $1,313 million for the first 6 months of 2025, up from $1,368.9 million last year. This is thanks to higher shipping prices, what they call freight rates, going up particularly in their China and Hawaii routes. Think of it like this: they're charging more to move the same amount of stuff, or even a bit less stuff in some cases. It's interesting to note that while prices are up, their China shipping volume actually dropped quite a bit, by about 8.8% for the first half of the year. They blame this on trade uncertainties and tariffs, which makes sense. When global trade gets rocky, shipping volumes can suffer. Despite this, higher prices help them make more money. On the flip side, in Alaska, they saw a nice increase in volume, up 2.7%. They attribute this to strong demand related to oil and gas activity, and just general good economic conditions up there. Their logistics segment, which is the smaller but still important part of the company, had a bit of a different story. Revenue here was pretty flat, coming in at $29.99 to the first 6 months of 2025, barely changed from $300.6 million last year. And their operating income in this segment actually went down from $24.9 million to $22.9 million. They say this is mainly because of lower business from their transportation brokerage services. So logistics isn't quite keeping pace with the booming shipping side. Looking at the overall picture, Matson's operating income for the first 6 months of 2025 jumped up to $195.1 million. A solid 20.8% increase from $61.5 million last year. This really shows how the higher prices in their main shipping business are boosting their profits, even if the logistics side is a bit sluggish. Now, let's shift gears and look at what they own and what they owe. Their total assets at the end of June 2025 were $4,485.4 million at the end of 2024. A big chunk of their assets is property and equipment, like their ships and terminals, which makes sense for a shipping company. Their containers and equipment valued at $910 million is up from $883.8 million last year. This tells us they're investing in their container fleet, which is good for keeping up with demand. And speaking of investments, their new vessel construction in progress is a hefty $302.9 million, way up from $98.8 million last year. This clearly shows they're building new ships, likely to replace older ones or expand their fleet, which is a major capital commitment. On the flip side of what they own, Matson owes quite a bit too. Their current liabilities, like accounts payable and other bills due soon, total $500 sitting at $331 term debt, with the total long-term debt sitting at $300 after accounting for some fees. Let's talk about cash flow, which is the lifeblood of any company. For the first 6 months of 2025, Matson generated $19.46 million from its operations. That's a good amount, but notably less than the $3.45 million they brought in from operations in the same period last year. A big reason for this difference is their spending on investments. They used $183.4 million for investing activities this year, compared to $131 million last year. A lot of that is tied up in building those new ships we talked about earlier. Financing activities also played a role. They spent a considerable $21.89 million on financing in the first half of 2025 compared to $79.1 million last year. A big part of that is money spent buying back their own stock, which they did a lot of, totaling $160.4 million in the first 6 months of 2025. This suggests they have confidence in their stock and are trying to boost shareholder value. So putting it all together, Matson is generating respectable revenue and its core shipping business is doing well, largely due to higher prices. However, they are investing heavily in new ships, which impacts their cash flow, and their logistics business isn't growing as fast. Their shareholder equity, which is basically what the owners have in the company after debts, stands at $2,618 million. This has decreased a bit from the end of last year when it was $2,652 million. This decrease is largely due to those stock buybacks and dividend payments, which reduce equity. Looking at other aspects, their pension and other employee benefit plans show some movement in their accumulated other comprehensive income or loss. For instance, their pension benefit obligations saw a small negative adjustment of 0.5 of the year, and post-retirement benefits had a similar slight adjustment. These are typical accounting adjustments related to changes in actuarial assumptions and are part of managing long-term employee benefit obligations. One thing that stands out is their Capital Construction Fund, or CCF. They have a significant amount in this fund, $6,566.7 million, which is up from $6,422.6 million last year. They're using this fund to build those new ships, and it's interesting how they're managing these long-term investments. It seems they're strategically placing funds into US Treasury obligations as well, which is a way to preserve capital while earning a bit of interest. When we look at their liquidity, Matson's cash and cash equivalents significantly decreased. They ended June 2025 with just $59.1 million in cash, down from $266.8 million at the start of the year. This is not necessarily a red flag by itself, especially when you see they have substantial receivables and that large CCF, but it does show a shift in how their cash is held and utilized. The heavy spending on stock buybacks and those big vessel construction payments are definitely eating into their readily available cash. It's a balancing act between investing in the future growth of the company, like those new ships, and maintaining enough cash on hand for day-to-day operations and unforeseen events. Let's circle back to how the business segments are performing. The ocean transportation segment is clearly the star performer right now. Revenue is up and operating income has seen a significant boost. Up 26 months of the year, this is driven by those higher freight rates, particularly in their China and Hawaii services. It's also worth noting their investment in ESSAT, a terminal and stevedoring company. Their share of ESSAT's income contributed $13.9 million in the first half of 2025, a big jump from just $1.6 million last year. This is mainly due to increased activity at their terminals. So their stake in SSAT is becoming a more significant contributor to their overall earnings. However, the logistics segment continues to lag, with revenue flat and operating income down. This suggests they might need to rethink their strategy in this area. Or perhaps it's just going through a slow patch. The fact that their main business, ocean transport, is doing so well might be masking some weakness here. Looking ahead, management expects continued uncertainty with tariffs and global trade, which could impact shipping volumes and rates. They anticipate their overall operating income for the year to be moderately lower than last year, even with the strong performance in the first half. For the third quarter specifically, they're bracing for lower operating income for the full year compared to their earlier forecasts, which shows some resilience. On the governance side, management has confirmed that their internal controls are effective and there haven't been any significant changes to how they manage financial reporting that might affect accuracy. That's always a positive sign. It's also clear Matson is committed to returning value to shareholders. They've been actively repurchasing their own stock. In the first 6 months of 2025 alone, they spent over $100 in their own valuation. So what's my take on Matson's report? On one hand, the ocean transportation business is really firing on all cylinders, driven by strong pricing power in a vital segment of the market connecting key regions. They're investing wisely in new ships, which should ensure their competitiveness for years to come. The increased contribution from their SSAT investment is also a positive sign. However, the less than stellar performance in their logistics segment is a point of caution. While it's a smaller part of their business, a sustained downturn there could eventually drag on overall performance. Also, their significant use of cash for stock buybacks and capital expenditures has noticeably decreased their readily available cash reserves, which is something to keep an eye on, especially given the uncertainty in global trade. For now, the core shipping business seems to be navigating the choppy waters of international trade quite effectively. Alright, that's our rundown of Matson's latest financial report. What do you think about their strategy? Are those new ship investments going to pay off? And what should they do about their logistics business? Let me know your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up. And don't forget to subscribe for more corporate deep dives. And seriously, swing by our Discord. It's a great place to connect with other finance fans. Thanks for watching, and we'll see you on the next episode of Corporate Decode. And seriously, swing by our Discord. It's a great place to connect with other finance fans. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.